Hey guys, this is Nick B from forex4noobs.com and you're looking at a GBP USD 4-hour chart. Now this is a live trade video, and in this video I'll be trading a trendline bounce. Let's zoom out on this chart real quick. Okay, so we have a trend line here, this blue line, that's a bullish trend line, and what I'm looking to trade right now is this trend line bounce here. So let's zoom in on this thing. Okay, so as you see, what's happening here is we have a bearish preceding trend. Oops, that's the wrong tool. We have a bearish preceding trend. So the bears are in control of the market. You got this very, very strong bearish candle here. And then you get an indecision candle, what some of you may call a reversal candle. Now, indecision candles can form anywhere on a chart. They can form randomly on a chart, or they can form on constant lines, on scalp lines, or on trend lines. But they're usually more reliable when they form on a constant line, scalp line, or trend line, rather than when they form randomly at no point of support or resistance. Now, I've been trading these kinds of trend line bounces for around about a year now, and they are very effective. Let me tell you why. So we'll zoom back out. Now, when you have a trend line, you expect to see bounces on the trend line. That's the nature of a trend line. The price goes down, bounces from the trend line, up, bounces, 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 etc. That's how a trend line works. So you should be able to capitalize on those bounces. Now, when you get something like this, zoom in again. When you get something like this forming on a trend line, you already know that this here is a indecision pattern. And when you get an indecision pattern after a strong bearish trend, it usually means that the bulls are trying to take control of the market. When you get an indecision pattern after a strong bullish trend, it usually means the bears are trying to take control of the market. So here we have an indecision pattern. We know that the bulls are trying to take control of the market. We're not 100% sure if they're going to be able to, but we know they're trying. We know that the bulls are fighting against the bears, trying to take control of the market and trying to reverse this trend, or at least the beginning of this trend, because it's not a full trend yet since it's only one candle. But we know that the bulls are trying to reverse it. We know that the bulls are trying to take control of the market. And this is happening at a trend line. So we know that the price usually bounces from trend lines, and we know that the price usually reverses when you get indecision patterns forming in a trend. So put two and two together, you have a pretty strong sign that the price is going to reverse now. But you can't just jump in because you think it's going to reverse. When you're trading, you need some sort of confirmation. So what I do in a situation like this is I place a significant high. Now this significant high, which I'm going to place at the 157.50, I'm going to place it at the 150. Actually, no, that seems a little close. Usually it takes a little while to figure out where you're going to place the line. Okay, for now I'm going to place both these lines, and I'll take a look as the price breaks to 157.50, and I'll figure out if I'm going to enter. I'll tell you why I've placed both these lines. Now, what I call this is a significant high. I've placed significant highs because if the bulls manage to break those highs, that's significant to me. That tells me that the bulls have power, that the bulls have more power than the bears, and that they're going to take control of the market. So when the bulls take control of the market, you can jump in and you could go long and make 50 pips, 60 pips, something like that. So I'll tell you why I've placed both these lines. I've placed the 1.5750 because that's a psychological level. Any rounded number is a psychological level. So the 15700, psychological level, 15750, psychological level, 15800, psychological level. So the rounded numbers are the psychological levels. The 157.50 is a psychological level. Why is it significant? Well, it's really only significant because traders think it's significant. Realistically, psychological levels shouldn't really exist. You know, 1.5709 or 1.5713 or 15 or 16 should be just as significant as 1.5750. But it's not, because traders, they tend to group their stop losses and entry orders around rounded numbers. So, you know, there's going to be more stop losses and there's going to be more entry orders grouped around rounded numbers like the 1.5750. So when the price reaches that level, you see this in the impact it has on the price. You know, if a lot of buy orders get triggered, then the price could start moving up. So psychological levels are significant. If a psychological level is broken, that tells you that the bulls have control of the market, and they could possibly keep moving up. So this is the first significant high I have, but I'm concerned since it's a little close to the current price, and I don't like placing my significant highs too close. The second one I have is the 1.5760. Now this one's significant simply because it had a bounce here. So it's an area of support and resistance. It's not a major area of support resistance. Sometimes they aren't major areas of support resistance, but with significant highs and lows, you have to make do with what you have. So this one isn't very significant, but it is an area of support resistance. If the bulls manage to break it, it tells you that they have some power and they're probably going to take control of the market. So right now I've placed two lines, two significant highs. When the price breaks the 1.5750, I'll consider entering a trade. Now a target on this trade is going to be around about 50 pips with a stop loss of around about 30 pips. I'll update as the trade progresses. Okay guys, our significant high just broke and I'm about to go long with 4 lots on this trade. Unfortunately, it's already at 1.5760. The entry I wanted was 1.5750. That's really unfortunate, but by the time I got the recording software up, it already moved 10 pips. So this is a bit of a late entry, 10 pips late. It's going to affect the total pips we take from this trade if it's a profitable trade, and it's going to affect the loss too if it's a negative trade. Another interesting thing to take a look at is the psychological level. We'll switch over to the 30-minute chart and I'll show you the kind of impact the psychological level has on the price. So remember how I mentioned the psychological levels? When the price comes up to psychological levels, it can bounce away, etc. You know, it's an area of support resistance, and this is why I don't enter trades just before the psychological level. This is why I place my significant highs at psychological levels if I can, and it's because of this. This is the 30-minute chart. As you can see, the price came up, it reached the psychological level, and it pushed down. Now, this could very well have pushed all the way down. So had we entered this trade early, had we jumped into this trade early and said, hey, I think it's going to reverse, it could have actually pushed all the way down and we could have lost. So I wanted to wait for the break there. When it breaks that psychological level, that indicates to me that the bulls have control of the market and that they can keep pushing up. Until it breaks that psychological level, the bears can still regain control and push down. So you really have to be careful with stuff like that. And oh, it's just jumped up. It's broken that second significant high. And it's moving quite fast right now. This is starting to look like a pretty good trade. Don't think we'll have to be in this one long. And there's some news coming up actually, so I don't want to be in this one too long. Hopefully we can reach our target before the news. Back to the 4-hour chart. Okay, looks like an interesting trade. I'm pretty sure this trade's gonna work out quite well. The target is gonna be, yeah, it's gonna be 50 pips, just a little less than 50 pips, because the entry was 1.5750. The target is going to be 1.5800, but I'm going to put it at 1.589597 just because 1.5800 is a psychological level, and you can see what happened with the last psychological level. The price came within 3 pips.